Hey everybody, welcome to AI Trends for 26 and beyond. My name is Hilding Anderson from Publicis Sapient. Looking forward to sharing a lot of the great content and material we have. So just a little bit about me. I'm the managing director of PS Ventures. And PS Ventures is Publicis Sapient's investment firm. We do joint ventures with our clients and directly invest in Series A and Series B firms. And I've been part of the leadership team of that since 2023. Prior to that, I spent most of my career at Sapient, over 20 years. I've head of retail strategy in North America. I led our Insights thought leadership program with 5 books over 6 years. I have an MBA, a background in science, technology, and society and emerging technologies, and actually majored in astronomy as well. So fun stuff happening right now and with SpaceX and other things. And then I live in Austin, Texas, with my 2 daughters, 12 and 14. So we're going to be talking about a lot of material today, talk a little bit about kind of how we're thinking about the AI market. There's so much activity happening. And of course, the rate of change is really accelerating. So I'll touch on a little bit on the macro side that we're seeing some of the big trends in AI. Consumer behavior. I always like to start my conversations and explorations with how are consumers actually changing in this world. I'll hit hardware and software investments because that's, I think, a really good market test point around the trajectory that we're seeing, changing ways of working and patterns for the future, as well as key takeaways. So I do try to bring this in to try to understand what does this mean for the transformation and enterprise digital transformation space. And that's why I touch on those trends 5 and 6 here before leaving you with some takeaways. So without further ado, let's jump in. So first of all, like the rate of change, huge amount of increase in AI spend, but at the enterprise level, up, 40% just year over year to close to 300 billion, from a starting point of really almost zero in 2020, 2021. So enterprise digital transformation is spreading with AI. We see a huge call to action for companies as they grapple with these new AI models, new ways of working, new competitors. And frankly, the pace of transformation is accelerating. We see that the average life cycle of companies on the S&P 500 has dropped to about 16 years now, down from what it was in the 1950s and 60s, where it was the average lifespan was close to 40 or 50 years on the S&P 500. So dramatic acceleration of spend. And a lot of this is due to the AI capabilities. So AI capabilities have improved massively since 22. I would argue, even since Q1 of this year, of 2026, and I'm joining you from kind of the middle of 26. So the role of chat kind of initially launched in 22, acceleration into kind of really the first effective LLMs around Claude version 1 and Copilot from Microsoft being released. We saw the first deployment of commercial vehicles in cars in San Francisco in 2023. That was after over 10 years of testing and promise, frankly, before they were able to bring that to the market commercially. We see the kind of rise of these new formats, multimodal AI that can understand text, images, and audio processing. We started to hit the wall with data center limits, and that really led into the next couple of years of kind of strategic growth. And I'll talk more about this with 2025 being, I think, the factory where AI models really are starting to be refined at scale. And then 26 sets us up for integration with more of the data center capabilities coming on, as well as more of the models being much more sophisticated. And as I said, Q1 was a real inflection point, I think, for the AI models in 2026. And so the question at hand, and what I'll try to explore with you today, is what's next, right? So that's where we've been. What does the next 5 years look like? And so my outlook for the next 5+ years at a high level is one, we're in the middle of the infrastructure era. So massive growth, a huge scarcity coming in the next 18 to 24 months. Everybody's talking about all the oil with Venezuela and Iran, but what we really should be talking about is tokens, and that's certainly one view. We saw OpenAI shut down Sora. We saw compute prices up close to 50% in 2 months. Token scavenging is happening, and a real question for enterprise customers is, how do I optimize my model usage? And all of this is kind of underlying this infrastructure growth. The second big trend that we're seeing over the next 5 years is this competitive focus on the enterprise context graph. So this is essentially recognizing that one of the most durable moats for enterprises is around understanding what data you have within the organization and connecting it to AI and connecting it to all of the other silos that exist within that organization. And at Sapient, we talk about that as the ECG, as the enterprise context graph. So access to that structured data becomes really important. And then the final kind of piece from an enterprise transformation perspective is really around agents and applications. And I think that's really the next big kind of frontier for a lot of enterprise companies, as well as, frankly, for a lot of venture capitalists and startups. And this is the notion that there's going to be a set of agents that are going to operate within large enterprises, and even networks of agents that operate within that. And we have not yet seen the Facebook moment for AI. We haven't yet seen even the kind of iPhone implementation within AI. So all of that remains in the future. We don't have an Uber today that's kind of equivalent to the impact that that's had using AI and these networks of AI. That's going to happen, and that is going to be really, I think, very, very exciting. On the other side, within enterprise, you start to see a real focus, and in startups that I talk to as well, real focus on this notion of loops. So how do you build a single agent or a set of agents that can self-improve over time? How do you define that loop so that it takes in new inputs and helps accelerate? And then the governance problem is a huge challenge. So we're seeing examples where you're having more agents across an organization is driving cost up and asking real questions around value. Are these large enterprises getting value from their AI investment, and how do we accelerate that time to value? And then, of course, longer term, after, I would say, at least 5 years at this point, is augmented general intelligence, or AI general intelligence, which is the notion of a general purpose AI that is as smart as a PhD plus candidate that you can interact with across all fields without the same degree of training. And that's going to be the next kind of the next step function, I believe. But we're some ways off from that. But a lot of people are working really hard to try to get there. So if that's the overall outlook, let's talk a little bit about a little more tactically at a set of trends that I'm tracking here. I've got about set of 20 or 25 trends overall that I'll go through here. It starts with consumer. I always like to start with the consumer. In fact, I usually like to start with the youngest consumer. I've got 2 daughters, 12 and 14. The youth lead the way here, and what we see is that even as of 6 to 12 months ago, close to 30% of teens say they are using AI chatbots daily. So this is already in active use. No surprise probably to the people on this call. And ChatGPT, again, as of kind of late 25. Is the number one. I think Claude's jumped up a little bit, and I've got some data on the next slide that is a little bit more recent. It's a very, very, very much the most recent I could find. But net is ChatGPT still has a meaningful lead amongst the youth of the day here in the U.S. The second piece is, we're seeing a lot of discussion around teens kind of reacting to AI in a negative way. And this question of, okay, is AI going to be a positive impact on society? Is it going to be a positive impact on them as well? And one of the interesting things is that despite all this chatter, what the data actually show is that teens are more positive than negative about how AI will impact them today. 36% of teens between 13 and 17 said they think it will be a positive effect on them, and just 15% said it will be a negative effect on them. More concern about society, but still net positive. So, and some of the rationale behind that net positive, it makes life better, easier. It's good for learning, getting information, and it makes them more efficient and productive. That's how they are expecting it to affect them. And then negative is a concern about over-reliance and the loss of thinking or creativity. They're concerned about job loss, of course. And then this notion of misinformation and hallucinations, and it'll be misused and as a threat vector for the teens. So I think a really interesting kind of examination here of the positive and negative, and kind of how the youngest generations are observing that. The other thing is, I think about consumers and AI is that 1 in 3 adults under 50 say they use it daily. And note that this is February of 2026. This is very much the latest data that's out from the survey, and Pew Research is a great source. And what you see is that, that a broader 18 to 29-year-old now in Q1 of 26 is seeing, 31, and the 30 to 49 is using it even more. 34% are using it at least daily, and that's going to expand. So we're very much across the chasm here in terms of the use of AI on a daily basis. And then what you also see on the right is the how some of the different platforms vary by age. So ChatGPT remains the most dominant. 44% of U.S. adults as of in February 26 are using ChatGPT. Gemini also very dominant, building off of the back of Google's investments. Copilot also has a distribution model. You see Grok is struggling a little bit in Claude. Among the 18 to 29, 30 to 49 is dominant. But remember, that's mostly the business professional kind of higher intensity usage coders, which when you think about the general population, is not as widespread as the general kind of use of ChatGPT. So I know in our world, certainly my world, everyone uses Claude as a starting point, or even kind of other more esoteric models. That's not the general population of the US, and that's not what we're seeing overall. So ChatGPT is really dominant there as the data show. The other interesting question I get a lot is, are corporations using AI, and to what degree? Sapient recently released some new research that highlighted among AI decision makers and some of the, what I would say are leading cohorts within AI, that 41% are using AI regularly as part of everyday work. 32% are using it at least in most processes, and 16% are using it occasionally. And so that is, I think, really interesting. That's a global number, and speaks to, certainly among this cohort of AI decision makers and leaders, that that we are seeing a lot of adoption here. And again, probably no surprise to this group. But when you look at some data that Anthropic released a little bit longer ago, I think it was the second half of 2025. You see a substantial gap. The item in blue are the areas that Anthropic, obviously a biased member here, felt that should be being used for AI, with management, business, computer and math, architecture and engineering, and legal being some of the key spikes, versus what's shown in red, which is kind of to what degree are they being used today, which suggests that only 30-40% of activities that could be done by AI are currently being done by AI. I think this is probably fairly aggressive in terms of the potential. I think you got to think about the total amount of work. We had some other research from The Economist that says close to 20% of businesses are using AI today, so it's still kind of early days. I think net is we have a long way to go. We are still in the early days of AI adoption and embedding AI into our workflow as an industry, and I'm excited about the potential for the future. So a couple other things I always like on these trend readouts to touch on, kind of how are humans spending time in some other areas outside of AI. And what you see is, if you just look across generations, the key online, major social media video platforms is the number one digital use of most teens. And TikTok, YouTube, and Instagram are the top three here, with Facebook dropping rapidly amongst the younger generation. No surprise there, I think. And TikTok being very, very dominant. The other big factor is Threads is now has more active daily users than X. So one of Elon's assets has struggled a little bit. And a TikTok Shop is the number one growth retailer in North America, from almost zero in just 2 years ago. So as that is a huge development in the U.S. market that not enough people are talking about. So the TikTok Shop is growing rapidly, and it's really going to expand further over the next 18-24 months. The final slide here, in just sort of general trends, social media has reached maturity. I think about in terms of maturity curves across all of these AI, very much at the upward trajectory. Social media now is mature. So we see time spent on social media flatlining, and even I think will ultimately start to decrease at some point. as we get the next wave of activity, likely an AI-driven type of engagement tool. And we see, nevertheless, that advertising on the U.S. social media sites continues to grow, up about 100% over 5 years. And it's basically 1 out of every 3 of digital. But I think even that will start to be replaced by new AI-driven tools. And I'll talk a little bit about what some of those look like, using the LLM interface to start to try to optimize your kind of search result in this new paradigm. So big changes coming to how advertisers work and how this landscape will evolve. I just highlight real quick that Gen Alpha is very much a tablet-first, YouTube-fed market. They are more likely to use YouTube than any other platform. These are the age of my daughters, and I think really important for thinking about the next generation after current teens. So these are very young teens today. All right, well, let's talk about some of the AI hardware, the next category here. So the biggest change that we're seeing is just a massive increase by the hyperscalers, investing over $650 billion in 26 in CapEx, up 36% year over year. The combined expenditures are shown here. I always get this question like, are we in a bubble yet? I would argue that you don't know exactly when you are in a bubble, but this feels like more like 97, 98 to me. If you lived in that period, I'm dating myself a little bit, although I was still in school in undergrad at the time. But I would say we're not at the end of this kind of first infrastructure cycle. We're kind of approaching the middle of it. And we got a couple more years for that infrastructure cycle to run. It takes time to build data centers. It takes time to ramp up power, and I'll talk about some of those trends. But there is definitely a risk in the future, and all we can do to help manage through that risk is continue to be focused on driving value within the enterprise for these AI models. Kind of be thoughtful about, as a venture investor, being thoughtful about what deals we look at, make sure there's long-term value, and we're getting the best pricing we can to get into those deals. So that's a big part of it. Other trends that we're seeing, I think it's just useful to think about this in context. So the AI investment that we're seeing right now is massive. In fact, it's probably the largest CapEx investment in the US of all time as a percent of GDP. And I actually ran the numbers on this. If you look at the Manhattan Project, the interstate highway system, both of those were about 0.8 and 1.4% of the total GDP of the United States at the time. The Apollo program was about 2%. The broadband build out was about 3.5%. And of course, we overbuilt as part of that and led to the .com crash. And you see that with the Cisco stock, spiking on the bottom right of this slide, spiking close to $80, $90, $75 there, and then dropping back to 15 before not reaching those heights until just a few years ago, just in 2025. So it took close to 20 years for Cisco, 25 years for Cisco to recover. We see hardware investment at unprecedented levels, and just the level of investment that we see here is quite remarkable. So I think that's important to understand. Part of the constraints we're seeing, power constraints and demand. So data center power consumption is expected to jump 175% by 2030. Nuclear is a huge push. I'm sure solar now is cheaper to generate power than any other kind of oil and gas traditional generation capability. So we're going to see massive growth in data center investments. And we're also seeing Amazon, Microsoft, and others, Microsoft restarting 3 Mile Island, crazy moves here that 5 years ago would have been not expected at all. We're also seeing, Elon kind of really pushing into data center, trying to compete with OpenAI, even though he's well behind OpenAI. So I do track Elon Musk fairly closely. I live in Austin, first of all, as does he. But more importantly, I think he has been very clear about trying to stay at the frontier of AI in some of these investments. So his Colossus and the Colossus 2 sites are really important. He's actually buying a power plant outside the U.S. and shipping it back to bypass U.S. infrastructure delays. Obviously with the SpaceX IPO being so successful, he has a huge kind of a war chest of capital that he's able to use to help accelerate his competitive position in data. However, he also said, we're going to launch a bunch of data centers into space. This is a no-brainer, he says. I completely disagree. I think there are huge problems with launching into space. So it is interesting to watch what he promises versus what he actually deliver. There's massive issues around heat, cost per pound to orbit, communication latency of satellites up that high. The cost of doing this, in my opinion, this is at least 10 years out before we have any sort of data center at scale, unless it's serving a very specific processing need within a satellite or within a kind of a regional hub that's existing there. But otherwise, much cheaper to build it, even if it's 10 times more expensive than it was 5 years ago, much cheaper to build it on the ground and maintain it on the ground. Okay, trend 12. So AI chip prices are going through the roof. Apple recently announced that they're increasing their prices by a substantial amount, by close to $100 for a lot of their products, so 10%, 10%. And that's largely due to this dynamic around AI chip prices. The AI chips represent now 50% of the industry revenues, but less than 1%, just 20 basis points of the chip total volume. So what that means is that these chips are incredibly more expensive than average, and have enormous amount of demand. And we're going to see shortages across the board over the next 3 to 5 years, impacting computers, impacting our cars, similar to what we saw during COVID, and impacting manufacturing. So these constraints are real, and they're physical constraints. It's not digital constraints. These are physical limitations on how quickly the fabs can produce chips. That the digital demand now, which is exploding, as I touched on already, digital demand is going to pull, and that's why we're going to see scarcity over the next few years. We're also seeing the demand, it's just funny slide, and I think appropriate that it's slide 13. This is probably the scariest when you think about trying to run a business that uses a lot of AI. What we thought that AI token costs were dropping substantially. That was the story even 6 to 12 months ago. But the latest models are 50 times more expensive in terms of token consumption. And certainly the public models from Claude and others, they are better, but the way that they have gotten better has driven multiple rounds of kind of much greater usage in the models themselves. And as a result, companies are moving to open source models, are looking to cap the amount of model spend. And so this kind of brute force approach to improving the models, which is what I think Claude has taken and others have taken, drives revenue for them, but also is going to lead to these constraints. And we've already seen it with Uber and Starbucks, and others have announced they're pulling back on spend. You see that open source usage, open source models, which are free, has surpassed the closed source models. And so these open source models they're also improving substantially. They're not as good as the latest Claude, Mythos, or Fable, but they are way, way, way cheaper, in some cases free. So that is going to be a big trend to watch, is how leading organizations balance model selection with growth. So the story a little while ago was, hey, we're going to grow, is going to get cheaper every time. That's not, in fact, the case. One of the interesting joint venture elements, and I'll touch on a couple of these as I go through, is the role that different nation states are taking in this race for AI. So Saudi Arabia, has a substantial PIF fund with their own internal investment fund. They've committed to this Humane One notion, where they're building their own Arabic language LLM and building their own compute within the physical boundaries of Saudi Arabia. They wanted to support Muslim finance, which prohibits the use of interest, among other factors. And they're building out their own data center with power to match. So I think there's this really interesting question happening at a strategic level around, do nation states participate in this AI shift? How important is it to have your own compute within the physical boundaries? What we saw with cloud computing is that you could share data across servers, across regions, obviously latency and other factors, but generally that got to a point where it was relatively agnostic. I don't know if we'll see that with AI, and particularly with some of the language differences around LLMs. We're seeing the similar factor in China, and it's probably worth a whole presentation on China AI and the models associated there, which are outside this bounds of this discussion. So, but we are seeing some really interesting things around nation state. So the next trend is really around multi-week autonomy. So this is, a trend that I've been watching and is going to be very important, which is, kind of how independent are these models, or how much do they have to come back and actually ask you for the user to manage them. And so what we're starting to see is I pulled the 50% success rate of the models. How long can it run with a 50% success rate? So half the time it can make it that long, and half the time it needs it stops because it needs additional inputs or has a problem. And that's gone from, this is logarithmic or exponential, by the way. This gone from it can run 16 hours or 4 hours. Last summer, it was down at like 3 hours. To this summer, it's close to a day, between a day and 2 days. Obviously, assuming you don't care about your token cost, which is, I think, an underlying trend of all my point of view, which is the economic side of AI is unsettled at this point. And I'll talk more about that. But what you're seeing with autonomy is that we're now at a point where you're doing 1 to 2 days independent, and by 2027, it could be as high as a week or two of independent activity. Now, keep in mind, this is just a 50% success rate. So what we see with automotive is it took 10 to 15 years to even get to a 99% success rate. We can argue if the autonomous cars of today are like the Waymos of the world are really at that are at that level. We're seeing with Tesla, maybe they're not. But certainly when you think about building a network, you need to be higher than 50% success rate. But there's definitely substantial progress being made here, and there's the potential that AI can automate 60 to 70% of tasks by 2030. I would also be remiss, though, in without mentioning that there are also substantial questions around, kind of have the models started to flatline, or started that curve of model productivity has started to decline. There's some evidence that AI models have basically sucked up and used all of the data that is available, and now they're moving towards some other techniques like synthetic data and others. I think that given the focus and resources, we're going to continue to see rapid improvement in these models for a period, but there is this question of when does that start to peter out, and the models won't be able to progress at least with the same rate. But even if that's the case, the models are good enough now that they can automate 30, 40, 50% of what most people do on a day-to-day basis. And that's what I think what companies are starting to look at, and is going to be what we track over the next 5 to 10 years. We're also seeing model lifespan. So from a P&L perspective, models only have a lifespan of 6 to 12 months before they're leapfrogged by the next and the global competition. So Europe, South Korea, China, and the US. US and China are the top two here. And we're seeing models only last 6 to 12 months, yet the leading frontier models by Claude and others take tens or hundreds of millions of dollars to build and refine. And that's going to be a huge factor in terms of how long and how fast we can improve these models. And that is kind of one of the key observations, is that OpenAI is deeply unprofitable right now. They are considering a IPO. The last I heard is that it's now thinking about 2027 for an IPO. But fundamentally, this is a venture level business, which is fine, which is kind of part of where they are. But what you see is that Anthropic is really, because they are IPOing sooner, really focused on driving more revenue. And so they've cranked up the price on Claude, which is going to, in fact, drive a lot of people away from using that tool into some of the open AI tools, as well as some of the open source tools. So anyway, so OpenAI is deeply unprofitable, $5 billion loss on $3.7 billion in revenue. They shut down Sora. Sora was a high-profile partnership with Disney. If you haven't tracked it, you should definitely look it up. They shut it down. It allowed consumers to make video on their own. And as a result, drove massive costs for OpenAI. In fact, it was burning $500 million, I heard, per month I'll say it again, $500 million per month. Even for a 5, 10, $50 billion company, that is an enormous amount of loss. So I think that's kind of where we are in the cycle, is that we see a lot of these initial leaders really struggling to build a viable business model. And similarly, at the enterprise level, we see a lot of questions around, how quickly can I make money from my AI investment, and how do I manage these new costs, which are now on our books with token costs, and that's a big factor. I think it's worth just acknowledging. So we just finished the section on infrastructure and the amount of investment, the massive amount of investments that happening now. The next wave really is around agents and the application layer, the software layer of AI. Some of the key things to watch out for with this is the kind of growing AI sprawl, where more and more AI agents are being deployed by individuals within enterprises, driving up total cost and consumption, and causing some challenges with ROI, and generally some of the low pilot ROIs that we're seeing, as well as some of the activity around the search for agents and their focus on loops. So let's talk a little bit about some of the patterns that we're seeing with software. So AI products are really already disrupting the market. This is really just the early stages. So we're seeing software innovations in AI across the board with our enterprise clients and in the market. But things that have already happened is disrupting the PPC industry, the advertising industry, pay-per-click. It's starting to disrupt browsers. Actually, OpenAI launched their Atlas web browser and very quickly turned around, and they announced a few months after launch that it was being canceled, and they're going to embed it and make some other changes. It's starting to disrupt mobile apps. So the use of AI as a discovery tool is becoming more and more common, and disrupting some of the mobile apps that exist in the market. It's disrupting commerce. There have been a lot of conversations around what's the future of commerce and retail in an age of LLMs, and I'll talk a little bit about that. SEO, and I'll talk about how search engine optimization is becoming generative engine optimization, and some of the companies that PS Ventures has looked at as part of that search process. And it's disrupting health and medical research. So some really interesting innovations happening in that space. One of the things that's so interesting and it's comparable to what we saw 10, 15 years ago with the rise of search engines and retail media networks, and social media networks rather, is the kind of this notion of organic findability. What happens when search starts at an LLM and doesn't start at a traditional search engine? So some of the companies that we're looking at from a joint venture perspective or a kind of co-investment perspective, Profound is a Kleiner Perkins and Sequoia supported startup that really focuses on this answer engine optimization. They help you track as an enterprise prompt volumes, answer engine insights, agent analytics, and others. We're also seeing companies like BrandRank that come up. They did a lot of work in the Ohio area, working with some large consumer packaged goods companies there. And broadly, what we're seeing is that more and more consumers are going to answer engines and LLMs for hard questions as they choose products. And I think it is quite parallel to the rise of social media that we saw back in an earlier era. But I think it's also, the next trend in software is, are we seeing the productivity gains? And the answer is no, we're not. That's, I think, consistent with us being, just the early days of the software layer. Infrastructure is being built out. Software layers is probably 18 months or more out before it has a huge impact, certainly at the enterprise level. But you're going to see more and more pilots. What we see today in terms of these data is, less than 2% productivity growth at this point. .com era saw 2.5, almost 3% annual growth over 10 years. And I do expect we'll see something like that from the AI era. There's also been a lot of discussion around hiring, whether AI is going to put a stopper on hiring. Is it going to let us all retire and move to Montana? And the answer is so far, actually, that early data, this just came out about a week and a half ago, is that hiring is actually higher for AI leaders than it is for the average. So the AI leaders are adding more workers, about 10% more workers than those that have a lagging AI profile. And they're actually lifting rather than cutting their share of entry-level workers. So It's not a perfect study, but one that was done in the middle of this year of 2026, and I think speaks to how AI can actually be, complementary to your business strategy and help and driving growth. And we're also seeing, of course, that a lot of the early pilots, which is again is where we are failing, and that's why it's going to take a little bit of time until we see really robust productivity growth from all this, massive $700 billion infrastructure investment that we talked about in the last section. We're also seeing some interesting kind of surprise headwinds. I think, OpenAI, for example, recently scaled back their Chat GPT checkout. This was a platform that allowed you to actually check out in the context of an LLM, and put in your credit card, and it would handle the entire transaction. Turns out consumers actually don't want to shop for retail clothes in that way. People actually love shopping, going through the process of looking at pictures and trying to imagine how it's going to work on them. And so this is a little bit of an LLM solution looking for a problem, when what we see is that a lot of consumers just aren't interested in shopping that way for now. What is interesting, though, is I think some of these new context protocols that are coming up, the MCP, very popular, along with some others, are going to be really important for agents to search for products and to bring back a set of recommendations. But ultimately, I think a lot of the shopping activity will still live on retailers' channels. And Sucharita, who I know, fairly well, as a long-term Forrester analyst. This is from NRF this past year, and she just noted that there's some significant, I would say, ambition to capture U.S. retail sales when it's a long way from having a great shopping experience in an LLM. So we'll see how that evolves over the next 18 months, and I'll keep you updated on that. As I noted, Atlas as well, OpenAI just announced very quickly that they're going to shut it back down. They launched it within a year of when they launched OpenAI last year, and I think it was August 25. They're now shutting it down. And what it intended to do is actually allow you to use agents and others to shop and do all of your activity through the browser. I actually downloaded it and tried it. It didn't work. At least it didn't work for me. And I think it is the wrong tool for the job in this. So really interesting. We're seeing some of those headwinds of companies launching their first version and then coming back. But we are seeing a lot of startups embrace AI, and this is actually a portfolio company. Quick Lizard is a dynamic pricing company in the US and in Europe. They use AI in a couple interesting ways. One is, of course, product development, vibe coding, and collaboration with clients. So developing new products and features faster, and just working better on the code, that core programming activity, engineering activity. And I'll talk about some of the platforms that are being used in a second. Product usage, so using LLMs to make meaning, understand what's coming out of the platform, is really interesting. And then product output, so behind the scenes of the business, what are some of the better models? How do you make sure you're using the very latest models to recommend the right price at the right time? So, and I think this is pretty typical of how startups are using AI, at least for now. I think there's increasing use of agents, but this broad notion of using AI both for customer-facing interactions and as well as for behind the scenes to improve the product itself is common. We're also seeing some really fascinating developments in the AI agent space, which, as I said, is really important. Moltbook was a dating app for AI agents that let AI agents talk to the other agents and ask for help, interact, and, as I said, sort of coordinate tasks and date. Had over 1.5 million registered AI agents. After within 6 weeks, it was acquired by Facebook, mostly an acqui-hire, to be honest. Terms were not announced. I don't know how much they paid for the actual value of the code, but the idea of having a dating app / social network for AI agents, very interesting. I think Mark Zuckerberg talks about a future with hundreds of millions of AI agents operating within Meta's products. I certainly expect there will be hundreds of millions of AI agents, maybe not solely within Meta's project, certainly not solely. So we'll see how that plays out. But this idea of an AI agent web starts to be really interesting. And we've also seen some case of overt promising and ambition. So 11x, I actually really like the concept. They
tried to build a set of digital avatars that would basically, for a startup, replace sales, rev ops, and go-to-market teams with autonomous agents over video chat. And these would go out and call your target market on video chat, and would try to walk them through and get them engaged. And obviously, for any startup, that's a really important activity. Reaching out to potential leads and trying to convert them, getting them on board. So if you could, have twice as many or 10 times as many sales agents out there, huge value if you can do that. But unfortunately, the AI engine wasn't ready. A lot of hallucinations and performance issues, very weak lead quality. There's some concern around fraud or misrepresentation, and the CEO resigned in 2025. So these guys are struggling a little bit, but I think it's an interesting example, but also a kind of a recognition of where we are in the cycle. But to be clear, like there is massive opportunities ahead of us for AI and software already here. SpaceX with their IPO announced the completion of the acquisition of Cursor a little while ago. One of the leading kind of AI assisted coding platforms, Claude Code, of course, GitHub, Copilot, Windsurf, Lovable. One of probably the strongest use case, because so many of these tools were trained on coding data. The strongest use case is around actually doing self-driven code, and we're seeing models now being able to run for hours and sometimes even days on their own, developing or doing very complex tasks. And so I know I talked a little bit about that earlier, but we're going to see more and more of these types of autonomous operators, and especially in the coding space. So that's something to watch. The other big kind of software industry that is, I would say, is more mature than many others is legal and tech. So the role of kind of enterprise legal at Harvey, Even Up, Agora, and Clio, that's growing rapidly. Harvey reached $100 million in ARR within 3 years. Some of the other kind of more traditional ones took multiple decades, and that's just because the AI tools now can be trained on the law. They can be trained in specific areas, and it's really starting to have an impact. And obviously, these are very high bill rates. So if you can, the arbitrage here is quite good. So those are the two big ones that are happening. But I think that only captures a very small part of the change that we have ahead of us, and some of these new changing ways of working. And so, what is the future of consulting? What is the future of enterprise activity? And I think it kind of a recognition that there still will be a role, I think, for leadership and for clarity around what needs to be built. What we said, BCG has found that 70% of CEOs say their biggest AI challenge is actually implementation, not just technology selection. And it's knowing what to build is really going to be one of the key differentiators, not whether you can build it. In fact, building software is getting cheaper at a shocking rate. Step function, of course, from about February when the latest models came out. And it's just going to be, and just has been, accelerated with the release of Mythos and the latest version of ChatGPT. And part of this is leading to a world where I actually believe we'll have more technology, more engineers, not less. And one of the reasons is this notion of the Jevons paradox, where we saw this with cloud computing. When you have massive drop in cost, you actually see the demand for that product go up substantially, and even more, in fact, than the cost drop. And so what we saw with cloud is that costs dropped close to 90%. And the total cloud spend grew over 10x. Similarly, app build costs have dropped 90% or more. And we're going to see a massive increase in the number of software solutions that people are putting out there, how many engineers they need to support and keep the lights on around those solutions. And so the new problem, in my opinion, is actually go-to-market, is actually figuring out what is the right product, how, kind of not can I build it and how much it will cost to build, because that's dropped, 50+%. The question is, should I build it? And what are the products and features that I should include here? And I'll talk about that a little bit more later. That is really where I think the leading edge of this is going to go. And Jevons suggests that there are going to be more and more people doing technology and using technology at the end of this kind of AI revolution, and not fewer. And we see the role of technology. We can see increasingly. This is a interesting kind of case study from Lowe's, where Lowe's has spent 6+ years building their Meridius point of sale platform in retail. And they're now saying, look, it's so good. We are going to continue to innovate in-house, but we're also going to start to sell it externally. And so you can go out and actually purchase the kind of AI powered checkout within, and you can deploy it within your own retail network. And it's a much more accelerated platform. Part of the next trend is really around the shifting frontier. So this is thinking through what are the implications if development costs, as they are, have dropped 50%. And what you see is that gray line. There's a gray box to the left. It's really, you would prioritize what projects got done based on the value of that project, the ROI. And what we're seeing now is that the pink box, the newly viable projects, now we have many more projects that, because the cost of development has dropped so much, are now have a positive ROI and are being built out. And some of this, and I'll talk about this too, is linked to the shift kind of from SaaS platforms to increasingly in-house and custom solutions. So pre-AI, only high-value projects. Post-AI, cost down substantially, many, many more projects. And the biggest issue that we're going to start to see is the kind of this AI spread across enterprises. Walmart faced this. And this notion of long tail software. So who supports it? How do you deprecate software over time? But overall, the total addressable market for software expands. So that's really interesting. And then the challenge to SaaS, of course, is, and we see this with stock prices, a lot of the products, if you don't have a very strong competitive moat, or you're working with small businesses, they're going to be incented to increasingly self-build and do more custom. In fact, we may return to a time where we're closer to 1985, 1990, where 80% of the market was either internal or custom, and not prepackaged. It's really only been in the last 20 years or so that that's crept up to close to 40, even 50% in some of the latest data. So the caveat, of course, is that it's not easy to build new software. In fact, we know historically 70-80% of all IT projects at large companies fail to meet their goals, budget, or timeline. And I've seen that again and again in my experience. And so even if you can build it fast, building the right software and rolling it out in the right way, integrating it with all of the different solutions within large enterprises is enormously challenging. And so it's not a simple matter to switch some of these softwares. It's very sticky. A little bit more fun stuff. So if you haven't heard of OpenClaw, you should have. OpenClaw is a personal, kind of the first generation agent designed for individuals. And you can download it. A lot of people are running it on their Mac Mini. It led to basically selling out of the Apple product. And what we see is that it allows you to have an agent that will book flights for you, submit insurance claims, but it can also do some other bad activities if you're not careful. Wipe email accounts. It will go on the dating app I talked about earlier. It'll take over with other agents, take over any agents it can reach, and have them do things maybe that you don't want to, or that it thought you might want to. To me, this is a great example of the power of agents and enablement. And so it's going to get kind of get better and better over time. In fact, a lot of people already have agents that monitor these agents. You think about, how do you manage token usage with these agents? How do you make sure that they don't just spin up a separate or 10 or 100 new agents that drive your costs up substantially? There are many different scenarios that you start to unpack, and you need additional software to help manage your own AI agents over time. So it does start to be a little bit fractal here as you go, but it's really exciting. And it's kind of the future. And when if you go back to, I think it was my third or fourth slide where I talk about the different eras, moving into the agent era, increasingly we're going to see networks of agents, multi-agent systems already happening in development. As I said, development is engineering is one of the most advanced, but we're going to see more and more in the business strategy and other domains, management domains, in fintech domains, where you'll have an agent running multiple other agents simultaneously. And you see that with Salesforce, Microsoft, all noting that, massive acceleration of agent adoption. And this notion of multi-agent frameworks is also surging over 500% on GitHub. So this rise of multi-agents is a big deal. So what does it mean for the future, right? Are we all going to be replaced by AI agents? What does that mean? What should I think about as a human in this world? I think for the corporate world and for the enterprise world, digitally led businesses are changing fundamentally, and this fast pace will increase stress, and it's going to make it hard, especially for those of us, in the traditional tech and tech services arena. But part of what you see in IT consulting is that delivery timelines for code have dropped, 50%, 40%. But clients' ability to embrace change and their engagement has not changed. And so you're going to see continued headwinds. Things are going to feel hard, business inertia, disjointed. There'll be lean wastes, a lot of dependencies, a lot of waiting while you kind of set up for the next wave. But it's going to be pretty exciting. At PS, we've been investing in a number of kind of accelerators and products that we have built. Bodhi, which is really a platform focused on orchestrating multiple agents. So in an era with tens or hundreds of agents running on your desktop, how do you make sure has the context of the enterprise and has safety and other concerns with it? Slingshot, which is our SDLC transformation tool, it helps you build new code and write code faster. And then our Sustain AI product, which is really focused on what happens once you launch the product. How do you build and sustain and measure it? And all of it is rooted around, I think it was something that's really, really important. And it was one of the big points I made earlier in this presentation around the enterprise context graph. So you've got to have your enterprise and even your own files available so that AI can get trained and understands the context of what you want it to do in this new environment. One of the things that I think when I think about new software engineering is I would just emphasize the need for balance. So if engineering, great software solutions at any level really are a blend of three main areas. The first is business. So can you have a business a model built around that software? Does it deliver ROI? Is it profitable? The second is it desirable? So do you want to use it? Does it have a good experience? Is it easy to use? Does it integrate with the other tools that you're using? And the third is engineering. How feasible is it to build this new concept, this new notion? That engineering slide has gotten dramatically smaller. That circle has gotten dramatically smaller. And so the other two areas remain really critical as you think about what to build and this new frontier around AI-enabled development, and the go-to-market is incredibly important. So AI is an amplifier. It amplifies your systems, not individuals. It requires platforms. It increases instability unless there are some guardrails. And orgs need some internal product and automation to harness AI. It's a complex system and needs to be interconnected. Last slide before I just close out here with a couple kind of key takeaways for you. I think it's worth noting that, Waymo has been driving around US streets for, almost 2 decades now. I rode in one the other day. They are expanding rapidly. It's an amazing product, amazing solution, but it takes a long time to build and to get this complex systems that we all take for granted as humans. So it's going to take also some time for AI to embrace and really be integrated into our day-to-day operating lives and our day-to-day work. So I don't expect humans to be replaced by 2030. I do expect all of us to be using AI every day and probably have a network of agents that are working with us and for us by that time. So, all right. So what does this all mean, right? So what are some key takeaways? So I think there are 10 key takeaways. One is, as somebody who's studied different technology revolutions, this is the latest in a long line of technology revolutions. It is moving very, very fast, which is exciting and a little terrifying, but it's important to have some context around it and realize that we've been through this before. There will be other technology revolutions in the future. So that's fascinating to me. Technology and IT are actually going to be more important, and there's going to be more usage of both, not less, in this era. The makeup of teams, however, and the ways of working are changing fundamentally, consistent with many other major technology revolutions, whether it's the steam engine or cloud computing. In this case, we're looking at developer to product manager ratios moving from, 10 to 1 to less than 1 to 1 in some cases, where you have more product people than you have developers, which is not something that anyone expected. Context is the new frontier. So understanding how you invest in your enterprise context, this is really important because AI is going to be trained on that data. And that's something that your competitors can't always get access to the same quality of data. So it's a little bit of the big data trend we saw over the last decade, but it's even more important because you've got a layer of tools now built on top of that data that can do things for us and for the business. We're going to spend massively more amount of time orchestrating agents and less time just doing the work itself. Digital skills remain relevant, but the activity and ratio of those on individual projects are changing. This is going to be there's going to be a whole new frontier of business opportunities, but the limitations are going to be not about can I build it, but rather, should you build it? What is the go-to-market? What is the point? What is the business goal that you're trying to solve with this investment? Human networks are messy. It's going to take time for this change to propagate through organizations. We're already seeing, very high failure rates of AI POCs, but we're also seeing glimpses of the future where companies are able to do things faster, cheaper than they ever could before. The growth mindset. So you need to learn about AI and new tools to stay relevant. This is changing so fast. And it's important to keep sharpening your tools and your brain to learn more about it. And yeah, Sapient is really investing heavily into this notion of transformation and our own AI tools and the people to take advantage of those tools. And so we'd love to work with you when the time's right, help you accelerate that transformation. Thank you so much. I'm Hilding Anderson. I hope you have a great day.